Hello traders, welcome back to another video. We hope you have a fantastic and profitable week. In this video I am going to share a new trading point of view, suitable for a day trader, and the emotions behind a trade, even though you must control them, and not let the trade to be guided by them. But frankly, the people emotions are those who drive the market. I bet you already seen the 14 stages of traders' emotions. Optimism, excitement, thrill, euphoria, anxiety, denial, fear, desperation, panic, capitulation, despondency, depression, hope and relief. Let's jump into the chart. As I said previously in this video, we're going to explain how we entered a trade based mostly on trading session patterns. Before shifting on lower time frame, we must see the bigger picture on daily or 4-hour time frame. We have here Euro Swiss franc, after a significant impulse in upside direction price pullback, and is resting around 0.236 Fibonacci, which is to short pullback, usually price pullback at least 0.382 Fibonacci level. We have marked the demand zone at is crucial on our system. We used a different approach for the entry, so you will learn something new in the video. We have two demand zones. The first one is located at 0.382 Fibonacci, and the second around 0.618 Fibonacci, so we have very strong zones waiting to be taped in. After this narrative bring us in the conclusion that the pullback is high probability to continue lower. This is why we are going to look for short day trade on lower time frame. We are shifting on 15-minute time frame. Here the things get interesting. The first visual impact that chart is giving us, it's a double bottom pattern, but we are going to dive deeper into the price action and how the trading session drive the price in order to have enter at the right time. Highlighting the session, we noticed that London session is bullish, but is still remaining between Asia high and low. So, the traders are waiting for a breakout in upside or opposite direction. But be aware the fakeouts, they are almost equally common as a breakout, so keep a close look at candlestick closure, they are essential in this situation. We noticed a rally base drop supply zone, created at the first hours of Asia session. It's very clear that we have a lot of sell order that pushed the price in downside direction sharply, so, above this zone are located a lot of stop loss. Having said that, we can call it a liquidity level. Usually market makers tend to grab this liquidity and move in opposite direction. As we can see from the next candle, price did exactly the same thing. We were monitoring this trade and waiting for candle closure to validate the fakeout. We could enter earlier, but we stick to the rules and stayed stoic. Of course, that we sacrifice in the risk reward, but we had stronger confirmation and in the same time a conservative stop loss. We could lower it, but in this way, we are increasing the chances of stopping out, and in lower time frame the price fluctuation are much bigger than higher time frame. We could avoid this trade because of the risk reward, but the confirmations were very clear, and as long as you find a profitable setup, you must act and grab these profits. We plan to close the trade between demand zone and London session low. When you enter a day trade require more dedication, which mean you must monitor your trade most of the time, because the market can reverse too quick against your trade, and you should react fast. I managed to close the 50% of the position after the rejection of demand zone, and moved stop loss to break even. As we can see, the price bounced. This movement correlates with the open of New York session, and touched our new adjusted stop loss. Being in front of the chart and with some profit from the previous position, we decided to enter again a sell trade after the New York session failed to break above the Asian range. This was a fast decision, but as long as you use controlled risk per each trade you are good to go. Price dropped sharply in downside direction, very similar with previous trade, and we did the same, closed 50% and stop loss to break even. The trade missed the final take profit for few pips, and stopped us out again at break even. So, in overall, we are satisfied from the profit. I could enter again a sell trade, but after 2 trades, I decided to take a break. As irony, this time market made the biggest impulse, much more significant than the other 2. But in overall was a profitable day and we can't complain about it. Thanks for watching the video.